In this lesson, we will build an intuitive, step-by-step understanding of the profit and loss account, also called the income statement. Think of it as a report card for a time period. At its heart, the idea is simple. Revenue minus expenses equals profit or loss. We will visualize the flow from revenue, subtracting expenses, down to profit. Now, let us walk through the main sections you will see on an income statement. 1. Revenue, also called sales, is the money that comes in from customers. 2. Cost of goods sold are the direct costs of making the product or delivering the service. 3. Gross profit equals revenue minus cost of goods sold. For operating expenses, sometimes called overhead, include items like salaries, rent, utilities, and marketing. 5. Operating income, also called earnings before interest and taxes, equals gross profit minus operating expenses. 6. Interest and taxes are then subtracted. 7. The bottom line is net income, operating income minus interest minus taxes. Here are the key equations you will use. Gross profit equals revenue minus cost of goods sold. Operating income equals gross profit minus operating expenses. Net income equals operating income minus interest minus taxes. Let us work through a concrete example for a small bakery. Suppose revenue is $120,000. Cost of goods sold is $45,000. Operating expenses are $40,000. Interest is $3,000. Taxes are $6,000. First, gross profit equals revenue minus cost of goods sold, which is $75,000. Next, operating income equals gross profit minus operating expenses, which is $35,000. Finally, net income equals operating income minus interest minus taxes, which is $26,000. To make this even more intuitive, let us visualize the flow of dollars with a simple pipeline diagram. We will start from revenue, partition it into cost of goods sold and gross profit, then subtract the operating expenses to get operating income, and finally subtract interest and taxes to reach the net income. Notice how revenue is partitioned into the direct cost of goods sold and what remains, the gross profit. Gross profit then faces operating expenses to yield operating income. Finally, from operating income, we subtract interest and taxes to arrive at the net income, the bottom line. That is the profit and loss account. Remember the big picture. Revenue comes in, direct costs lead to gross profit. Overhead gives operating income, and after interest and taxes, you see the net income. Use this structure to read, explain, and build income statements with confidence.